A lot of stocks came running into the gaps as the Fed just gave us a warning. Super microcomputer surges. The fear and greed index is dead smack in neutral territory. Now, when we look at how the indices fared across the board, the Dow was down 120 points. The Nasdaq was up 195 points, with the S&P 500 also being up 23.36 points. Russell 2000 up 1.73. We look at advancing issues versus declining. We had 57.6% of issues advancing on the day. Then we come over and look at how the sectors perform. Technology by far leading the way. The big laggard out there today was energy, followed by financials. Now, why was energy lagging on the day? Well, this report basically sums it right up. Oil slides on UN report stating Iran agrees to halt near grade uranium production. Now, if we look at a chart of crude oil, you might say, well, Mike, it doesn't seem like crude oil went down all that much. And you'd be right. Crude oil was slightly up today. However, if you look out here on the 5-minute chart, when that report first came out, we saw crude oil come crashing lower. That was quite a move down on crude oil, basically all the way from 69.64 all the way down here towards 68.49. So that was over a full dollar drop in a matter of less than 5 minutes. You can see the market was able to recover from that quite well. However, when we look out here on the daily chart, we also want to be reminded that if we were to look at this as a lower level consolidation, we are still pushing up off that lower portion of that consolidation. This high volume area right here in the profile could be a target location at about 70.83. Now we look at this article right here, super microcomputer surges as company names, new auditor. And if we actually look at a chart of SMCI, we can actually see it's had a good couple of days. Today, actually being up 31.24%. Now, keep in mind, we have a large gap over here. However, one of the areas I would want to target would kind of be this structure breakdown point right near this wick. However, be very cautious, all right? We already know they've had accounting irregularity issues. That's why the stock has been plummeting lower. So if you decide to take a look at SMCI, just know ahead of time, a lot of that downward pressure has been due to accounting issues. We come over today, look at the dollar index. Dollar index today, still a little bit of a red day, but not much of a push. We tried to rally up early on, only to get smacked back down. And then we look at gold. Gold also rallying up again today. So again, anybody that took advantage of this play off the 50% Fibonacci retracement level, high volume area on the composite profile, congrats, it's working out great. I still think gold wants to try to make it up here towards 2667, and we'll see if we can push above this high volume area. Now the question is, will it be a straight push up, or do we start to pull back a little bit and form an ABC pattern to take us up towards that price point? Now we come over and look at 10-year yield today. 10-year yield slid down a little bit. That should be favorable for the market. However, we come over and look at what the Fed had to say today. Fed Schmid, large fiscal deficit won't cause inflation because Fed will raise rates. Well, hold on. I thought the Fed was on a rate cutting campaign, an aggressive rate cutting campaign at that. Well, if we look now at the Fed watch tool, we can see that the market is priced in a 38.1% chance the Fed does nothing at the next FOMC meeting coming out next month. Now, let me know in the comment section down below. Do you guys think the Fed is going to cut rates by 25 basis points, keep them the same, cut them by 50 basis points? Let me know your thoughts in the comment section down below. Now, today during the live stream, we're looking at the heat map. We saw Intuit was down quite a bit. But if we look at this article right here, Intuit H&R Block shares fall after a report that Trump's government efficiency team is considering a tax filing app, which would be in direct competition with companies like Intuit. And look at Intuit today, down $34 or down 5.1%. We also look at H&R Block today, also suffering a big nasty red day, down 8.2%. Now, I got to be honest with you, a free app to help you file your taxes sounds like might be something good out here for the US taxpayer. Now, when we look at the volatility index today, we saw the VIX up 77 cents on the session, and going into a close, we saw the VIX continuing to rise. Now, it did drift substantially higher off of the lows, and that was all thanks to Russia, Ukraine, causing the market to come back down lower. However, if you were to come over and look at the Dow Jones this morning, notice we had that large gap to the downside, and we were talking about this morning on the live stream. Was this going to be a case where they basically trap the lower level shorts and run it on the way up? We actually did a pull out there, and we can see the poll results right there. 66% of people thought that Nasdaq would close red. Only 33% said green. Now, if you don't want to miss the next time we go live, make sure you're subscribed and the bell notifications turned on for all. But now we saw the Dow today almost made it all the way back up, closing the gap. However, the diamonds were down $1.35. And we got to ask ourselves, is that all she wrote? Does the Dow have further to go? Are we going to come fill that election gap? We look at the small caps today. They were actually able to close green. Notice we gapped a little bit lower, right down towards this prior swing point. Boom, big bullish engulfing candle on the way up. Now, can we build on this tomorrow? Will there be buying opportunities out there for tomorrow? Well, if we come over and we look at the volume profiles, notice we dip below the last 2 days lows and we rally back up. And that's something we were talking about today on the live stream. Now, notice the MACD indicator is near the zero line. Now, we got to be careful. If we cannot push up and out, that could be nothing more than a recharge point for another leg lower in this market. Now I want to bring it to your guys' attention. There is no published 80% sale with Apex Trader Funding at this moment, but if you use the link in the description box down below and use promo code Mike at checkout, I've been told that 80% discount is still being applied. Now we come over and look at the QQQs real quick. Notice we've come down to where the 61.8 fib level. We've now been trying to bounce up off that area. We've come into gap resistance. Are we going to be able to push up and out throughout this week? Look at the MACD indicator. It's still crossed to the downside. If we were to start grinding right back up, we may actually set up some type of MACD divergence, but what I think is more likely than not, in this whole minus development area of the profile, I think we're going to spend a little bit of time there, just kind of back and forth and work our way back up, maybe even making a run towards new all-time highs. On the 4-hour chart, MACD indicator is still crossed to the downside, and you can see we're right near gap resistance, but we have two minus development areas, and one of the ones I'm really watching is going to be right around 507.24. So keep that area marked off on your chart. On the 30-minute chart, again, this is a little bit dangerous. As we're coming into the gap, now we see the MACD indicator is just above the zero line. So if we start to see a little bit of weakness out here tomorrow, that could be nothing more than a recharge point for another leg lower, or at minimum, a retest of the recent lows that we've seen over the past couple days. Now, we come over and we look at the futures markets real quick, and we look at this on the 4-hour chart. What do we see? Well, I really like this, and this is the fibs we had drawn out from, today on the live stream, but essentially we had this low over here. This morning, we come screaming to the downside, we sweep those lows, and then we get back up. Once that occurred, I said, watch out, we can have some further upside testing, and we drew out the fib. The 38% level was a target location. The 50% in this high volume node over here is another high probability target, but one of the areas I really like, which we'll look at on the 30-minute chart in a minute, is really going to be the 61.8 Fibonacci retracement level, the untested value area high. And if I remember right, we had a big order sitting out there when we were looking at Bookmap today on the live stream as well. Now, one of the things that we started talking about today in the live stream was there's another Fibonacci level near that 61.8 off the 4-hour chart. And there's a couple areas I want to watch tonight for potential buying opportunities. We have a minus development area right here, and we have another one right down here. Now, think about the minus development areas as nothing more than inefficiencies in the market. Now, the first area will come in somewhere in the ballpark of about 20,709, and the second area is going to be about 20,700. Now, the area I really like all the way down here would be about 20,589 down to about 20,585. Now, if we were to pull a Fibonacci retracement from the low today up here to the session high, notice the 50% fib level comes where? Right near that minus development area. Then if we were to go ahead and map out an A to B equals C to D pattern, assuming this is the high, we don't go any higher, then we come all the way down towards this minus development area. Notice the price point, 20,998. When we come back over here and we look on this 4-hour chart, notice 20,998 would be just below this untested value area low. So now we have multiple points of attraction where the market could make it to. Now remember, in order for this to play out, one, this needs to be the high of the market right here. And then we need to come all the way down towards this second minus development area, then start to turn. So if that does start to take place, that's going to be the game plan I'm going to be looking for the Nasdaq. Now we come over and look at the SPY real quick. What do we see? Big bullish engulfing candle right off the 50% Fibonacci retracement level. And then if we look, we saw this gap right above us over here. Now, just north of that, we do have a high volume area about 598.15. MACD indicator right now is not the most bullish on the daily chart. On the 4-hour chart, we are still crossed to the downside. So we have a bearish cross of the MACD lines. On the 30-minute chart, we can see we're right up here near the zero line. So if we start to see weakness, we got to be mindful, right? Lower level consolidation, MACD indicator works off that big momentum push to the downside. Now we could be getting ready for another leg lower. Now, if we can start to take out the high from today, a possible run all the way up here, potentially fill in the gap. However, here's some of the problems that we have. If we look at the economic calendar essentially for Wednesday, what do we have on deck? Well, we have crude oil inventory numbers at 10:30. We have a couple FOMC members speaking, slated to be low impact news. So what's going to be the news catalyst that's going to get the market cooking to the upside? I think to play devil's advocate, the news that I could really think about would be more along the lines of Russia and Ukraine. And that news would not be good for the S&P 500. It'd probably send it drastically lower. Now, I also want to remind you, tomorrow is going to be an important day. Why? After the bell, we have NVIDIA, we have Snowflake, we have Palo Alto, we have Jack in the Box. And if we look at the biggest expected movers out there, Zim is expected to move plus or minus 17% before the market opens. Jack in the Box plus or minus 15.5%, Snow plus or minus 13%, and NVIDIA down here plus or minus 9%. During the live stream today, I showed everybody how NVIDIA is such a high weighting of all the indices out there. So now when we come back over and we look at the futures markets and we look at the S&P 500, here's a fib level we had drawn out from today's live stream. Now, I talk about this all the time. The S&P loves to retrace to the 50% level. Well, you notice we almost made it all the way up there today. We didn't quite make it, but we got very, very close. So the question is, do we make it to the 50, start to pull back, and then potentially build some type of ABC pattern to come back and retest last week's value area low? And who knows, maybe even all the way up here towards that untested point of control at 6,015. Now, when we look at the daily profiles, here's a minus development area we were watching today on the live stream. And this zone is going to come in anywhere from about 5901.00 down to about 58.99. And this is going to be a point of interest. Now, if we pull back to here, that could actually set up that ABC pattern that we talked about going up a little bit higher. And if we were to role play this out real quick and just go ahead and measure from swing low up here to the swing high and back down, that would give us a price completion on that ABC pattern all the way up here at about 59.93. Now, if we go back and we look over here, 59.93, that would bring us about 10 points higher than what we have for that untested value area low. And it would bring us above the 61.8 fib level. So what this means is, as we're playing with this, right? If the market goes a little bit higher, we can adjust that fib level as well to the upside. And if the market goes a little bit lower or a little bit shallower, we can play that. But again, I want to prepare for that just in case it does pan out. That's my ideal situation. We start to pull back, we work into this zone, and then we go ahead and try to catch the bounce up and out of this area. Now, if you guys like to learn how to set up Apex Trade Evade accounts to trade off the NinjaTrader 8 platform, make sure to watch this video right here.